Merk Investments, and I've been giving these morning briefings since a little bit after the peak in the turmoil in the markets, thinking this might be helpful. Welcome your feedback as to whether you like the format, whether I should have them longer, shorter, and whatnot. In any case, happy Friday. Um, Yesterday, Thursday afternoon at market close, suddenly the S&P futures jumped higher, and it's widely attributed to Gilead Sciences that had a therapeutic trial progress. And this, like anything else I say here, is not investment recommendation. And let me just get my disclosure out of the way here so I can continue talking. I mentioned that simply that there will be advances, there will be setbacks. It's quite likely, though, that at this stage, for the current phase anyway, we may have more positive news in the sense that we will have more talk about opening up the economy, and then of course odds are we'll get setbacks, right? And then what I'm concerned about particularly is on the job market, that if you own a business that's shut down, you will scramble to reopen it, but you're going to take it slowly. If you're bruised, you're going to hire the minimum staff you need, then see where the revenue comes in, and then gradually increase it. May not go back to the full staffing you had before simply because you want to take it more cautiously than before. And even if not everybody does it, and some are more aggressive than others, I think net people are going to be more cautious on that. Similarly, there's a board meeting I should be attending in June, and question debate has come up. Well, is it going to be an in-person board meeting? And everybody says, sure, we'll meet in person. I am, so first of all, not sure that that is going to take place. And even if we happen to meet in person, I am almost certain that many people will not in similar situations. And so that's going to mean fewer flight tickets, fewer hotel reservations, and so forth. Then similarly, President Trump talked about having stadiums again full in areas that aren't so affected, having sporting events take place. And by all means, like everything else, it gets politicized. And several people on social media said, I'm not going to attend these things until there's a vaccine. Well, be it as it may, odds are, yes, people are going to be more reluctant. So even if these sporting events come back, they're not going to be packed right away. Now, all of that, the counterpoint to that is that there's a discounting mechanism in the market, and there is an awful lot of free money available. Indeed, there's government money available. There was, to Journal, an article today about Berkshire Hathaway not getting any phone calls. Historically, in a crisis, they get phone calls of folks that want to get bailed out, and Berkshire can do some convertible or something, get a good chunk of the business on the cheap. And that's not happening this time, at least not yet, at least not that much announced. Again, not an investment recommendation on Berkshire. And by the way, we don't usually own the companies that we mention. If we do mention any companies, and we try not to mention companies, but in any case, is this because governments in the US and elsewhere are so extremely active that you're disrupting the private capital allocation? And obviously, there's a reason for that. And maybe it's socially justified or politically justified, but you are disrupting the kind of the allocation process of the free markets. And fear not, governments plan that around the world. We all know nationalism has been on the rise. Germany this morning said they're going to tighten laws on foreigners acquiring German companies. Now, there was a first phase of that. I think it was last year, it could have been the year before, where there were companies in what was considered to be key industries. So Chinese companies had been acquirers, and the government didn't like it, so they put some restrictions in place. More restrictions are put in place right now. They don't want foreigners to gobble up German companies on the cheap. And so there will be restrictions like that. On trade, we hear stories here and there of trade being disrupted, including for the so-called PPEs now, the personal protective equipment. Some of that is, of course, very political as well, because the trade war was started by President Trump. And so some are suggesting that it's because of that some of that personal protective equipment cannot now make it across the borders. And people stand obviously on very different fronts on this. Some people say, oh, this is wartime, we need to look after our own interests. Well, my own view is that you need to have as many channels as possible to procure your goods, which means trade is a good thing. And so when there is a crisis and certain channels are disrupted, you do have alternatives. And so it's for this sort of environment that you do need to have as many friends as possible to get the things from where you need them. Obviously, that doesn't mean you have to neglect your domestic production, and maybe you have to think about what to do about that. On just the virus front in general, we monitor these various charts, various countries, and I trust many of you do as well. I've been watching Mexico with concern, partially because of the migrant workers to help in the harvesting. Harvests have been disrupted in some places in the world already, and the curve is starting to flatten a little bit in Mexico. So who knows? It's obviously pure speculation on whether anything will be disrupted or not, but certainly there's a risk of disruptions on that front. Indeed, Apple is now publishing its data now on mobility, and there it shows that Mexico is actually quite effective in throttling down mobility, and so it does seem like there's strong action taken there as well. Japan has yesterday, I believe it was, increased its movements to now call a national emergency. Previously, it was mostly on the Tokyo area. And so there will be a back and forth. Japan early on was considered to be one of the kind of better places to be. So in the end, we're opening up the US. We got this guidance from the White House on how to move it, and then delegating it to the governors. That appears to me as the only practical way to proceed, both from a health point of view. Granted, I'm not a health expert, but also from a political point of view. It seems to make sense for just about all the stakeholders that are part of that, with the CDC surveying the data and providing information to the various states and guidance on what to do and the implementation of that in the various states, which does mean, of course, that we'll have a patchwork of solutions. It's something I've been arguing is just the default way that's how it's going to happen in the US. That's the only way that you can manage a huge country that is historically decentralized, where states have a lot of rights and obligations and so forth. And of course, that means that some states will be quote unquote better at it than others, whatever your definition of better may be. Some thoughts here on the markets here more specifically. I'm trying to manage multiple screens so it doesn't look too odd when I turn my neck in various places. This morning, West Texas was at $17.40. As I talk, is at $18.40, and the markets were holding up reasonably well. As I indicated, they were shot up yesterday. We're up a little further since then, and have since come down a good 40 points on the futures. Now, some people have pointed out, wait a second, when you talk about crude, there's no such thing really as a spot price you talk about. It's always a futures price, and so this particular contract is going to be the one quoted until Tuesday this coming week, and then the next contract thereafter is at $25. And so let's always keep in mind when these things are quoted on the commodity side, it's quite likely that it's a derivative, it's a forward contract. Logistics and very much that particular specification of the delivery for this particular month is very relevant. If you look out further, the crude prices are more normal, and so then if you kind of think about the various producers, they of course have to think about in the context, do they hedge themselves and whatnot. But needless to say, even with the cuts, this is a very tough environment. And the other thing to keep in mind is with the kind of the bloodbath we've had in the stocks, the major indices are ever more tech heavy and healthcare heavy. It was Amazon and Netflix, again, no investment recommendations here, reached all-time highs yesterday. And so those companies, according to investors at least, are doing well. And so the big oil and so forth is just less relevant. And does that mean everything is going to be clear? One thing that concerns me is I've gotten an increasing number of calls from friends and others saying, hey, should we go back into the market? And clearly, markets have recovered quite a bit from the lows. we're only about 15% or so down from the all-time highs. That sounds like a normal correction at this stage. Now, if there's anything normal about the recent weeks, pinch me because I obviously didn't pay attention. To me, this didn't sound normal at all. Um, and so, are we lured into something, or is the massive spending, the massive monetary stimulus, and the discounting mechanism provided by zero interest rates providing us this opportunity to discount these things? I'm very skeptical of that. Now, all that said, I'm not giving investment advice. I have encouraged everybody to follow a process, and that's really the best one can do. Now, people have kind of surmised, well, when you're faced with a shock like this, how do you act? How do you behave? And what you're supposed to do? Well, I got news for you. We have never ever had a shock like this. There is no playbook. The playbooks we have are related ones, right? How do you deal with emotions in the markets? How do you deal with leverage in the market? How do you deal with when you have a monthly paycheck, if you're fortunate enough to have that? Do you continue allocating money to the markets? Those are the sort of things where that's why I'm saying you follow your process, because in the absence of a crystal ball, which none of us have, that may be one of the better things to go. Now, if you want my crystal ball, um, I would think that there is going to be significant ripple effects, that we're not going to have a V-shaped recovery, that it's going to be all but impossible to have that, with many jobs lost. That a lot of people, if I just look at my own household, we're saying, hey, should we get rid of a car? We don't really need so many cars that we have, right? We might be one of these one percenters that have the luxury of having multiple cars in the first place. And the current environment shows us that, well, you don't need to travel as much, right? Uh, and so do you trim things down? Do you trim back big expenditures? A lot of Americans in particular spend a small fortune on their vacations. Well, now travel is restricted. You really need to go to that luxury hotel or to whatever it may be, to spend so much money on that next vacation. And if you just look at as a frequent business traveler, you can gauge how well an economy is doing based on the pricing of hotels. Now, obviously, there's always the spike when there's a conference season and whatnot, but we've seen in recent years that how room rates were going up and up and up and up, and that's clearly a sign of was a sign at least of a booming economy. And so things will adjust back downwards, and that means, of course, there's less profit available for many players. Our habits may well change in ways that we don't even know yet. Um, will will you need to have a physical office presence? It's become perfectly acceptable to have a Zoom meeting, right? And so do you really need to spend, there are some law firms that spend 20% of their revenue on a fancy office building. Is that really necessary? Is that really required? Similarly, for tech startups, do you really need to have a physical office? Well, some have never had one, but I would think fewer people will want to have one. And then, of course, you've got this other thing I haven't talked about in recent days, but WeWork, again, not investment recommendation, the debt they own, they have in the market. Let me just pull that up if I can do that while we talk, where that is trading. That's the May 25 bonds they have in the market. That is trading, well, it's up from the lows, I think. It's trading at 42.58, and it was the low was 34.50. 100 is par, right? And so that uh, that suggests that maybe there's going to be some restructuring, and if WeWork were to go bankrupt, they are the largest tenant in the U.S., if I'm not mistaken, and so that would cause some ripple effects. And talking about that sort of space, a lot of real estate developers are highly levered, and we haven't seen real estate prices plunge, but those things usually are acting slowly, right? You first have you have reduced occupancy and you have reduced volume, and then prices come down with a lag. And so now again, the force against that is, of course, zero interest rates, right? And that begs us the question again: are we going to have inflation or not? As I mentioned on a previous session like this, Bernanke, when he was asked, he said, "Oh, right now forces are deflationary or disinflationary." I 100% agree with that. At the tail end of that, he was more cautious in how he phrased it. And that is because, again, we just do not know. My own take is that there is a risk that it's going to be inflationary, and more importantly, there's a risk for inflation expectations to get unanchored. We economists love it that forward inflation expectations don't move much. Well, the current environment does have a real chance that inflation expectations first come down and then balloon higher. We have Powell, who promises already that he'll be slow and gradual in removing this. So does that mean we're going to have a multi-trillion expansion of the Fed balance sheet, meaning foaming the runway, so to speak, to have as much liquidity as possible until we're back at record low unemployment? Obviously, the Fed can change its mind anytime and so forth, but there's going to be a lot of discussion that we have to catch up to go back on the previous trajectory and whatnot, and we have to have everybody to get a job back, and that may all be admirable to have those sort of ambitions. What is going to happen to inflation? All this money we're spending, the cost of all these efforts, and we haven't even talked about the lack of tax revenue that's going to happen to states and whatnot. We have to socialize those sort of issues somehow, and the way that's done, you can of course try to have a wealth tax, but that's going to inhibit economic growth. And so the other way to do it, a convenient way to do it, is with inflation. And so that doesn't come by the snap of a finger. It doesn't come by having the price level of everything move up gradually. We'll see it in spots here and there. Obviously, the personal protective equipment has skyrocketed. A while ago, way before this crisis, because I do some work on the weekends that requires a mask. I bought, I believe it was 100 masks for $12 or so. Those are not these 95 masks, but they're now you can get like 40 for $30 or something like that, if you can get them at all. And so yes, there is inflation. Now, is your typical consumption basket now shifted all towards masks? Probably not. But travel might be cheaper, but you don't travel, so that's not part of your consumption basket. Food is a bigger chunk, and in my view, yes, there's a very significant odds that there's a increase on the food inflation. Then just one other or two other pieces of information here. If you have missed it, Libra was back in the news. You may recall that's the cryptocurrency that Facebook was trying to promote, and whenever I mention cryptocurrencies, I do have to get a disclosure out. Beyond the usual, cryptocurrencies are extremely speculative. They are not for the faint of mind. There are no investment recommendations whatsoever on cryptocurrencies. Indeed, I try to avoid mentioning them on social media for that reason. I mention it only because it's part of this geopolitical times that those sort of efforts are continuing to be undertaken. They got some pushback again pretty much right away from governments, but that sort of effort is still underway. Good. And so with that, one of the things I've been mentioning is the 3-month LIBOR rate that was in the 130s. LIBOR rate is the intrabank borrowing rate, and the reason why that's relevant is that if you look at the 3-month treasury rate, that's at 11 basis points. And so the 3-month LIBOR rate is at 113, so 113 basis points. A week ago, it was at 135, so that's gradually coming down. Another sign that stress in the market is abating a little bit, but not everything is abating. If I look at a few other things, and most notably the VIX curve, that is how fear and is priced now versus the future. To just take a step back on that, in a normal market environment, the present is more certain than the future. In a panic environment, you're very fearful about the present, but you think the future is going to be clearer and less frightening. And so in a panic environment, you have what's called backwardation in the VIX curve, which means just that. And we continue to have that. So for all those who say we're out of the woods, well, we are still in a fearful environment. And so just because the markets have gone up doesn't mean we're out of the woods. Now, Obviously, if we're back to where we were before and you thought there was a buying opportunity, you can take that with a grain of salt. But when I hear people say, hey, retail investors, should I go back into the market? I tell them, well, follow your process. And then I just point out to them, we are not back to normal. That's just something to keep in mind, right? If you want to go back to the market when things are back to normal, we are not. And again, this is not investment recommendation. On gold, the spread between the spot and the futures prices has come in here a little bit. We're at 1692 currently on the spot price, at 1709 in the futures price, and so those gaps had been wider. So they're similarly, at least as of right now, less uncertainty in the market. 10-year Treasuries at 60 basis points, and so that also hasn't moved here too much. If I just look here at a 1-month range, we were actually at the we had gone up to about 80 basis points not a few days ago, but we'd also been a little bit lower in the kind of upper 50 basis point range. So the 10-year yields are still very, very low for historic standards. And it's part of the reason why equity prices, I suppose, are doing just fine. Today, the dollar is weaker. The NOK, the Norwegian kroner, is the best performing currency today, up 1.15%, followed by the New Zealand dollar and the Australian dollar. Yesterday, it was kind of the opposite. Those currencies were doing poorly. Gold, I mentioned earlier, gold is actually down on the spot price, down 1.5%. Other than that, many European markets were up 2-3% today. Some of them have come down here a little bit with the markets here going on. We do have Friday. I mentioned that. It's always newsworthy because on Fridays, people always have to think about the traders anyway, what they want to carry into the weekend. And so sometimes that's a reversal of some of the things we've seen during the week. But at the same time, you never quite know what other strong policy action is going to be announced. So do you want to be short in a market when maybe another bazooka comes out? And I'm not suggesting that will, but that's the sort of thing that the speculators try to have a flat book or at least reduced leverage going into the weekend. And so depending on how they were positioned, they tend to unwind them. We do have the commitment of traders report where we see, at least in how speculators were positioned this week. Those data are always several days late. They are of Tuesday of this week, and so they are to be taken with a bit of a grain of salt as well. So I'll leave it at this. Have a great social distancing weekend, and I'll talk to you next week.